Hello guys, good morning all. In continuation of our entry condition, I would like to make another video probably to discuss the remaining entry condition that we trade. Yesterday video mentioned or we discussed about trend reversal entry, and I hope that you guys were able to understand perfectly well what we are looking at when we are taking trend reversal entry. But as time goes on, we are going to still, refine, look out for maybe problems that we get, using the techniques and see if there are ways we might be able to, refine them to make them more, reliable and easy to understand. But without wasting more time, I would like to go into the next entry requirements, which is bullish trend retracement breakout entry. It's a little bit long, but what we are just looking here is when market is going up, when we are in a bullish trend, market is going up, we look for a little bit pullback, and then we wait for a break of the high, then we can continue on that trend. So that is to say, if you miss like this uptrend, this is an uptrend right here. This is an uptrend. Let's see, we have a low here. This is like a support. We have support here, and this candle can add as an engulfing candle. So let's say we miss this trade because we're supposed, assuming we want to ride this uptrend, we're supposed to start thinking about entering the market at the close of this candle, because this candle now confirm, the bullish taking over the markets, trying to push it a little bit up. So let's assume that, we are not able to enter this trade, but we still feel like, okay, we're going to take advantage of this trade. We wanted to, wait for a pullover and enter. So that is what we mean by bullish trend retracement breakout entry. Bullish trend. This is a bullish trend. From here is the bullish trend. Market is going up, it's a bullish trend. Then we look for retracements. So there are many ways, many areas that, we see retracements. So when a market started going up and you see that you are actually going to enter the trade like a little bit late, you just have to wait for a retracement and then you enter. So there are many areas we can enter the breakout. So the first area that we say, okay, that gives us a little bit an opportunity to enter a breakout is this pullback. Let's look at this pullback. And let me use this. So you see market make this top. When market get here, the market pull down a little bit to this level. So when you see this pullback, so you have to wait here. So immediately price broke out. Price broke up the 206,871.03 level. Then you have a very valid opportunity to actually enter the trade. So that is a one confirmed trade entry for the bullish trend retracement breakouts. So if you're taking this trade, though, we're still gonna discuss about entry and like stop loss. But assuming you enter this trade, so you have to know that your stop loss, instead of being here, because this stop loss at 196.857.18, it should be a stop loss area for people who enter this trade earlier. But being that you enter the trade a little bit, using a breakout, you have to target, look at this area to act as your stop loss. So the area we're talking about is 200,985.08. So that is actually where you'll be, looking to place your stop loss. But the whole point here is, so when you are looking at the breakout, so price break the high that it made previously, which is, let me use these things to show you the high. So this is the high. So you can see when price get here, then the sellers were able to put down a little bit. We are able to put the trade a little bit down. Then before we started seeing a continuation. So that is actually what we're looking for. So whenever price get to the top again, like here, price made the initial break here. So like we always say, don't trade if you're looking at the breakout, don't trade the candle, the first initial candle that broke the level you are looking at. So don't trade the candle. All you have to do, give it respect, let the candle close, and then you look at the next candle and see, okay, what is the next candle is gonna do? Because you want to know their behavior. Are they gonna, follow up on the reversal, or are they gonna be a false break? Someone just keep asking the question about, false break. But that is what, usually happen at false break. So when markets break a certain level, everybody is looking at that level and everybody is like, okay, market will continue going up or going down. Then market will do something very, very, very confusing by going back to, where it came from. So we just have to let the breakout candle to close. Then we started looking at the next candle. So that is the breakout, the bullish trend retracement breakout. So the whole scenario plays out because we have a bullish trend, then we have a retracement, then we have breakouts, then we enter after the breakout. So like I say, this help you if you open your chart and you say, okay, hey, I missed this trade, then you can always enter into any trade. So there are many areas you can see the breakout. Like here, there's a little bit pullback. It might be like there's a little bit pullback. So all you have to do is just to place your horizontal line, and then immediately there is a breakout of the pullback, you can enter the market. So at least taking this pullback, you already know that market is going up. So the market has been confirmed. You did not enter early, though you enter late, but at least it's the risk in this trade is a little bit less, because you're now risking like less than 100 points, then you are targeting more than 1,000 points. So that is a very good trade. So we have to be looking at it. And another thing I need to point out, the reason, if you look closely at the chart, is 1 hour. I'm doing this at 1 hour because that is where I see a very good example to show you guys, because I've been looking at the chart to see, okay, if the 5 minutes is going to give me a very good information or chart that I might use to, do this video, but, it's taking a whole lot of time. So I decided to go to the 1 hour time frame. So you can look for pullback, entry, whatever, on any time frame, but you just have to be mindful of the risk you're taking. So when we are doing a risk management or risk risk management subject, if we are discussing on risk management, we'll be able to understand more clearly the reason why we are doing these things we are doing. So here you are risking less to make more. So your ROI, return on investment, will be a little bit higher because the breakout, the pullback is small, and you're able to take advantage of the pullback to target, a more wider price movement. So that will be it on bullish trend retracement breakout. But if you have a question, you can always ask your question during the training. So the next one we have is bearish trend retracement breakout entry. So bearish trend retracement breakout is just the opposite of the bullish trend. Okay, in a bearish trend retracement breakout, we are looking at a downward trend. Market is going down. Let me see if I will see any market that was going down. Okay, here, let's see on 5. Okay, market is going down like here. So assuming you mix the entry, which possibly could have been here or here, because this candle, we saw an indecision candle here, then we saw a bearish control or takeover of the market. But some people who are more aggressive might be able to take the trade. But if you are not that aggressive, you have to wait for the trade price to cross over the 20 exponential moving average. So when price cross, you let price to close below it, and then you can take the trade. So that is like giving you an overview on reversal trade. But over here we see a little bit of bearish trend retracement breakout. It might be a little bit large, but it's still very good example of what we are looking for. So all you need to do, you want to sell, all you need to do is confirm the pullback, and then you might decide to enter the trade to sell. But looking at this setup, I can only tell you that the pullback started ranging. So when market is ranging, it's a little bit confusing because it takes longer for price to actually decide on where to go. But in this case, we were expecting price to go down. So you see here that there is a little bit false break that plays out, but even at that, is it happened to be a successful bearish trend retracement breakout because price broke the retracement that's started. The retracement was at 332.9102. So that is where the retracement started. And when price broke the retracement, it was able to go down a little bit more to 332.30334. And you're seeing pressure going on the downside. So, but one clarification or one point that I would like to make over here is whenever you're trading any kind of entry and price is already, your relative strength index is already at oversold or overbought, there is no point taking the trade because you are buying at a very high price. So if you know that an asset or a price of an asset, people were buying like $18, and you come back the next day and they are selling it at $50. So what's the point of buying? You are buying at a very high price. You are buying at the top of the price. So it just doesn't make sense. So sometimes you might be able to score some point, like, you bought it like at 50, you might be able to sell at 20. So why not buy at 20? Why not buy at 25? Why not buy at 30? So why do you have to buy when price is oversold or overbought? So all you have to do is just exercise patience and look for a next trade, or you wait for a pullback. So that is it for bearish trend retracement breakout. So we're gonna try to finish up this entry by looking into range breakout entry. Range breakout entry only tells you that, okay, market is ranging, so you have to figure out where do you want to, when there is a breakout, then you have to enter on the breakout. So it might be difficult for me to see a range. This market, always, most of the time, they trend. That is one good thing about it. That is why someone say, okay, maybe on the last class, so okay, someone asked me, why do we have to trade volatility index? Why not call up? Why not stock? Why not forex? Why not others? The answer to the question is that volatility index give people great opportunities right now. It trends. So it's a kind of market whereby you can enter and you see markets trending. Those are the things you want. So you want market to be moving away from your entry. So you don't want price to be stalling. You don't want price to be ranging. So you want price to be making a trend, going up or going down. So then you ride a trade. That will give you more profitability, in your trade than market ranging. So if market is ranging a lot, there might be a whole lot of risk, coming up. So let me look, scan for more area to see if I will see anywhere that the market is ranging, so that way. So that we'll be able to. So so that we'll be able to finish up the entry part of this trade. So I'm just scanning, see, to look at if there is anywhere that market is ranging, but right now it's like I'm not seeing it. But let me just look more and see what is going on. This one is not. It looks like it's ranging, but that is not ranging. So if you want to confirm a range, it has to be parallel. Is that really parallel? What is happening to me? No, that one. Okay, it has to be. Well, we might consider this to be a range, but it's not just hitting those levels the way we should have, wanted it to be. But let's just, for the, purpose of this training, let's just take that this is the range. This is the range. Now we are looking at two range, and mind you, we say that, okay, we saw we 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 saw a trend forming, then price started to range. If you look at maybe the daily 4 hour, we are now 4 hour, price might range for a very long time. So but the whole idea is like there is an uptrend, then price started to range. Then now if you look at your relative strength index, is already at 62.78. So it got to the 70 marker and retrace back a little bit. So whatever relative strength index is telling you about it, the information you can get from the relative strength index is that market is not overbought. So there's no point for us to started looking for to buy. So we just want to see if there is any way the market will break this range on the downside, then we can sell. But another thing I remember is the relative strength index. Sometimes market will be, the price action might be stalling somewhere. It's not really making any move. Then you'll see that the relative strength index is making move. So you need to be very, very careful. That is where you are being they are setting a trap for you. So you need to do something. Okay, if somebody can just ask me a question on this information or this point, I will clarify on it. But just to stick on the breakout entry that we are talking about. So let's just imagine that this is a range forming. So we just have to wait and see what price we do. So if price break the range, which is 3231.945, then we allow the candle that broke that level to close. Then we can consider entering the markets. So if we enter the market, we can start pushing it down here, push it down here, push it down here until we started seeing signs that the market is about to retreat. So guys, I'll try to pause the video here, and that will conclude our entry conditions. So the next discussion will be on risk management. So we're gonna take risk management maybe tomorrow, and then after risk management, we're gonna go into trading psychology. Then after trading psychology, we're going to go into stop loss. And then we're going to round up with maybe boom and the crash market index. So there are different kind of index that behave differently. Then we're going to look into it and see the opportunities they provide and how we can take advantage of them to make more money. So at this point, I will close this trade, and we're going to take question and answer during the training.